Hey, how's it going? Today I'm going to be talking about institutional investors and what that is. Institutional investors are organizations or entities that invest large sums of money in various financial assets on behalf of their clients or shareholders. These investors typically have substantial financial resources and expertise in managing and investing capital. They play a significant role in financial markets and can include a wide range of entities. Let's take a look at some of those entities. I have done a little bit of research on my own time. I have read a number of books on this particular topic, so I have some understanding, but perhaps it's always good to brush off all the fundamentals. And while I'm doing it, might as well share some of that information for the people who are interested in understanding what that might be. I understand that there's as well as someone makes a career out of doing it, as well as active investment, passive investment. So there's a lot of structure when it comes to it. If anything, I like to begin with fundamentals as well as share those fundamentals with some of the people out there. They play a significant role in financial markets and can include a wide range of entities. Well, some of those entities can be pension funds. These are retirement funds established by employers to provide retirement benefits to their employees. They invest the contributions made by both employers and employees in a diversified portfolios assessed to generate returns over time. Sure, there's some options there. There are a lot of funds up there, Canadian teachers funds that are actively investing into a lot of properties. I'm not entirely sure if that's a good business model, but those business models out there. For some reason, then I'm trying to enter property market myself and buy a number of properties. Yeah, all those properties are very expensive, and for some reason, then a lot of younger people would become renters instead of property owners. So there's the way how those funds are operating, whether that's currently the way how things are being done. Mutual funds pool money from individual investors to invest in diversified portfolios of stocks, bonds, or other securities. They are managed by professional fund managers. They're looking. I personally believe they're looking to perhaps do that with some of AI technologies and everything. So they're constantly looking at how to reduce some of those costs up there and potentially uh, increase overall effectiveness of how some of those funds are operating and managing large portions of capital. Hedge funds is something I'm going to be looking at in more detail just in a minute, but we're going to come back to that. Insurance companies invest the premium they collect from policyholders in various assets to generate returns and meet their future obligations, such as paying out claims, endowments, and foundations. These are organizations often associated with educational institutions or non-profit entities that invest their endowments or foundation assets to support their long-term financial goals and mission. Perhaps my own understanding, right? So, making young people to rent and pay to older people where everything is being managed by the fund. So the fund has access to a lot of capital and they're looking to make that capital work, right? So by doing that, they employing younger people to rent and pay older people, which is a very interesting business model. And currently within the US, 40% of people are renters, where in other countries, uh, some countries in Europe, it's 96% of people are owners of their own house. Just putting into perspective. So I don't know, and I don't necessarily agree with that, but I guess that overall the way how economy works and balancing act takes place. For someone who is big of owning instead of renting, perhaps later if I will be pitching some of, some of those projects up there, if I were to build a lot of properties and I were to rent the large portions of people up there, I don't know if it makes sense to promote renting instead of owning. Not entirely sure, perhaps providing opportunities to lend money for younger people and buy out the property. Perhaps that's a business model. Might be more suitable, but again, options out there for who are interested. And if you, for whatever reason, you have a job in the city center and you can purchase a property in the city center, so for some reason you need to pay rent, and in the end of the day you don't really own anything. So again, so uh, you live, you learn, you grow, I guess. What makes sense right now, perhaps it might look differently in the future. So I'm not entirely sure if I might think differently in the future, and how things might balance out in the future in the long term. So it's perhaps worth mentioning that I don't know. Banks and financial institutions, large banks and financial institutions often have their own investment divisions where they invest their own capital and offer investment services to clients. So when I don't know if any takeaways, perhaps the way how business model that I'm presenting right now, right, where people would build a lot of properties. So this is what is happening in other parts in Asia. There are a lot of governments who would build all cities, right? They would build all cities. Those cities are empty, but people would have access to a lot of properties that they're potentially paying for. So again, I don't know if that business model works. So I don't know. So if I will put into comparison, if I'm comparing U.S. and I'm comparing to some of the Asian countries, and the way how they're operating, they would give you access to those properties, but not necessarily you want to live in those properties. Again, so I don't know which business model might work better, because some people might build property and give you access to that. So at the end of the day, you might leave that might leave you with having a property, but do you need it? Do you want to live in there? Perhaps then you can. I don't know. I don't know. Sovereign wealth funds. These are state-owned investment funds that manage countries' reserves or access capital. They invest in various assets to generate returns and support the country's economic objectives. Especially the country, some of those oil-rich countries right now within the world, things might change in the future with electricity coming into effect. But currently, there are a lot of companies. I have done a lot of research to understand what this fund is all about, so I do understand it. So there are a lot of opportunities where those funds are looking for different vehicles where they can invest their money in. Private equity firms. Private equity firms raise funds from institutional investors to acquire and invest in private companies. They often aim to improve performance of these companies. This is the aim, what the way how sometimes they could do that by acquiring those companies and laying off a lot of staff, as well as selling all the assets that my company might have on its portfolio. Venture capital firms. Venture capital firms invest in early stage and startup companies with a high growth potential. I have spoke with some of the people within the space. Again, they would look for a 30-fold of returns on their investment, as well as potentially they would be interested in taking some control of your company if that's something that you're looking to give away. They raise funds from institutional and individual investors to support innovation and entrepreneurship, as well as they have some requirements for entrepreneurs who are leading those companies, that they need to be good at sales and telling a story, I guess. For people who are interested, I have published a journal. In this journal, I'm sharing a lot of information for everyone who is interested. We have structured this journal in a way where you would be able to develop habits that will last potentially. And I'm structuring around 24 hours and how you can make most of your 24 hours. Particular areas with those 24 hours, which I personally believe are very important, that would be a dictionary and improving your understanding when it comes to finance as well as other areas, perhaps motivation. Key areas would be personal development, professional development, as well as some of the other metrics that would be perhaps your nutrition, perhaps things that you should accomplish every single day, just to name a few, as well as perhaps core values that everyone should focus on. You can find it in the description below, as well as Top Retailers has it. Institutional investors play a crucial role in financial markets, as they often have significant influence on asset prices and market demands. Uh, they typically have access to a wide range of investment strategies and resources, which can affect market stability and the allocation of capital in the economy. The investment decisions are guided by their investment policies and objectives, which may include generating returns, managing risk, and fulfilling obligations to their clients or stakeholders. For anyone who are interested, there are options there, and I'm not entirely sure if I cover those options or all of those, but I'm gonna be looking at all of the options mentioned in more detail in the later videos. Thanks for watching. I'll see you next one.